Hello, folks. Brandon Chapman with today. It's a Wednesday video. Taking it for Don. Don's on a cruise. Don's taking a vacation. Don doesn't take vacations. but anyway, taking over his slot today for the Wednesday video. I'll be back on Monday as well. But this was the big news today. Obviously, it came down to what? The FOMO trade, Nvidia, their earnings. So far, they did not disappoint. We'll kind of look at that, among other things. Utilities, energy, the two best performing sectors on the day. Can they both coexist? Probably not. We'll look at that and why one of those may break and areas to look at. So as we look at the broader market, we'll switch back to ES. You'll notice ES futures are up slightly on the so far. Again, we're factoring in the effect, because this is the futures market, partially of the move in Nvidia. The news for Nvidia was pretty bullish for the most part. We look at the after hours trade. You'll see we tested about 745. We closed at about 674. If you notice the difference there, it's about 70 points. Who would have guessed 70 points could be a potential area of resistance or a potential target on the move? All you had to do was look at today's expected move. It was a little higher earlier in the session, but the expected move for the 23 Feb, that's this week with 2 days left, was $66. To put that in perspective, $66, the stock around 674, that is about a 10% move. This is a $1.7 trillion stock. We're looking at this company, they're adding or taking away 170 billion in market cap. That's if we look at, let's just take Tesla as an example. Big company, hugely impactful, right? Well, Tesla's market cap, let's go to the base course here. We'll just open this up. The market cap, $620 billion. Nvidia could gain or lose over a quarter of the market cap of Tesla by tomorrow. And it looks like after hours, Nvidia is poised to gain a quarter of Tesla's market cap tomorrow, after hours being up about $70. Now, sometimes you get these aftermarket moves and they don't hold. But the fact is, we saw a little bit of a dip here for about a minute, and then it was a bid, and it just kept getting bid until it reached that upper expected move about 745. So while this is a profound move, right, this is a significant addition in terms of market cap. I mean, getting back to what 740 only gets you back to recent highs. Again, that's a huge addition of market cap to Nvidia, but this isn't the gap that, Amazon had, for example, or better yet, Meta is a better example of that. A huge gap, gaining well over 10% in value. So we'll see what happens with Nvidia. I mean, sometimes these companies get bid, other stuff comes out. You have a press conference, you get a conference call, and things start to turn a little bit. Sorry, I'm trying to find it here. Trying to find the right level. Conference calls 320. This has probably already happened here. Conference calls start at 4 p.m. So we've got probably conference calls just starting here for Nvidia, assuming that I'm not sure what time zone that is, but you get the point here. Again, the conference call could unwind this a little bit. The expected move is 745. But again, going back to this was the expected move coming into this week based on what? Today's volatility. If we look at where things were as of last Friday, I'll bring up the auto expected move here, right? Auto expected move based on Friday's close was a little higher at 768, but we tested the lower expected move. Now we're looking to maybe start to run, maybe test the upper expected move. This was as of last Friday for the entire week. But the expected move coming into today for the rest of the week, we're looking at testing that expected move based on the option volatility at the close today. Now, this shifted a little bit, but earlier in the session, we look at Nvidia here, the volatility, if we look at the options and the out of the money, you see this big kind of drop here. But for whatever reason, there's just there's a little bit some data issues here in Thinkorswim. But notice how the puts are up sloping, the calls are up sloping. Earlier in the day, this was just like this, right? You look at strike prices, implied volatility. Calls being bought, puts being sold. This was a very directional trade. This was for this Friday's expiration, 23 Feb. And for some reason, there's just some data issues here around the money. But the point is, this was a trade where you saw call buying and put selling. It's just the opposite of what you normally see. It created a very decent opportunity. I walked through it in my session earlier today of how it's pretty easy to speculate on Nvidia's upside because of that positive volatility skew. You can buy the lower strike, sell the higher strike on the call side, and you actually have a little bit of an edge in it. You could go at the money, you could go out of the money, you could customize whatever level you want. And if at least you pick something going towards the upper expected move, you probably did pretty well. And that's the example that we kind of set up earlier today in my session, is like you kind of test the prior highs, 745, 750 up here on the news announcement. If it did that, that'd be a pretty nice trade that we walked through earlier today. So again, so far at least, Nvidia did not disappoint. The periphery of Nvidia, namely SMCI, is experiencing some after the close momentum. Tested about 846. We're kind of backing off that level a little bit here to 790. 846 is right about there. So we're seeing a bit of a bounce. This is that in that ecosphere. But look, I mean, this has not been all rosy. The professor and I did our at the close session today. Looked at Palo Alto Networks. We looked at other periphery and Zscaler, for example, a CrowdStrike that are seeing some downside as a result of Palo Alto Networks news report today, or earnings report, cutting some revenue expectations by 20% or more. Stocks down 28% today. Again, companies are not being rewarded as much when they beat, as much as they're hurt when they miss. And that's a real issue right now. We're seeing more and more of the movement in the market resting on fewer and fewer shoulders. And again, I saw this tweet. I can't remember who sent it out from me right now, but it was a quote from Stanley Druckenmiller talking about in 1987, price to book multiples being at record highs, yields being near record lows, less breadth, right? More resting on the shoulders of a handful of stocks. And this does perfectly kind of illustrate our current market, with more and more resting on a handful of companies, the Magnificent Seven, contributing significantly to the S&P 500 earnings, basically turning what otherwise be negative earnings growth to positive earnings growth. Everything's resting on the shoulders. And that's why NVIDIA's announcement today was so significant in terms of its implications. NVIDIA had 20% of the market cap, 20% of the holdings within SMH. It has 5% of the holdings within the Qs. And so it just has tremendous impact because of its $1.7 trillion market cap, which is probably going to add to tomorrow. So again, just profound dynamics playing out right now. As we look at the VIX leading into this, you saw the VIX rise yesterday. Even today it was higher, faded a little bit. Skew today ticked a little bit higher to about 142, but still at elevated levels, down from 170. So we've seen kind of this selling calls and buying puts form of hedging being offset a little bit by just buying puts, driving up the VIX. And so normally you do see as the VIX rises, skew falls. But again, it just shows there's been a lot of hedging. The question then becomes, now we're out of the woods with regards to NVIDIA, do we start to see skew come down a little bit? If you're going to be a real bull on the market, we probably need to see skew continue to fall here, get below 130. If we get down these low levels down here, all bets are off on the market moving higher. But the broader array of you, as you look at what's going on in terms of insider transactions, we're seeing a lot of insider selling. And in fact, a good example of insider selling is Capital One Financial. Capital One Financial looking to buy DFS, I believe in an all-stock transaction. COF clearly selling their stock at the highs or their expected highs here. So expect to see that not all of the market is going to be necessarily bullish. There might be areas that could necessarily go down or probably should go down. Certainly the big money center banks like JP Morgan are enjoying this spot in the sun with the capital markets doing well, making money there. But the realities of the regional banks that are lending, that are holding the bag for commercial real estate, this is not exactly the most bullish scenario for them. If we look at real estate's recently got a little bit of a bid under it over the last week. But in light of what's going on in terms of 10-year treasury yields, a 20-year auction today, not necessarily doing all that great. A big tail on it. Maybe we start to see less foreign demand for our bonds. Again, more spending. We're currently running deficits at about 6.2% of GDP, which is, you only have a few points in history where our deficit spending has been this high as a percentage of GDP. Again, this may create upward pressure as inflation is rearing its head again, and as the Fed is more likely to be on hold. How does that play out for real estate if borrowing costs are going higher and if their yields are not as competitive against the 10-year treasury? This could be relatively negative for real estate to the downside. And another interest rate sensitive part of the market's utilities. Utilities got a nice bid this week along with staples. If we look at the 1 week performance, XLE, materials, utilities, real estate, financial staples are in there as well. A lot of these interest rate sensitive dividend paying names have gotten a boost this week. But what happens if 10-year treasury yields continue to rise and we're seeing energy prices rise? It doesn't seem like this is probably an untenable situation where weakness may start to see more weakness in either energy or utilities. All you got to do is look at the current futures term structure for oil, which was up about 1.3% today. Go to the product depth in here, look at the futures. And what you see is that we have a backwardation structure, if this thing ever loads, a backwardation structure of falling prices as we move out in time. Looks like it's not going to load for us here. It's not even really loading at all. Sorry, I got Nvidia in there. /CL. That's why. There we go. If we look at falling prices, this kind of flattened out a little bit here between the March and April contract, but falling prices, this is a bullish scenario. And again, you look at some of the news coming from the White House about potentially curbing or limiting or eliminating exports for liquid natural gas. What does that mean for investment in crude oil production in the United States? It's generally going to be relatively negative. And we currently have, supplies that are, kind of towards or just below the midpoint for the 5-year average. And so we're in a position right now where oil prices may be poised to go higher. With news last week of Warren Buffett adding to his holdings in like Exxon, Chevron, Oxy's been a big holding of as well. I walked through last week in my session some bullish trade and unusual option activity in Oxy. It's produced a nice kind of bounce over the last few days. Energy seems like it's poised to continue higher in the short term, which places squarely against that of utilities and real estate. So as we consider, where we're at currently in utilities, and you look at the current volatility structure here, 28 days out. Again, what's going here in terms of utilities? Jeez, 23 days out. We're seeing something drying up in here for some reason. These bid and ask off. We're closed here at the moment, but point being is you could construct a downside vertical spread. Again, the volatility is all messed up in here right now. The quotes on Thinkorswim, but generally you could buy a higher strike, sell a lower strike, play the downside. Give yourself 30 plus days for it to trade south of 61. May not be a bad scenario. Buy the 62, sell the 61. Buy the 62, sell the 60. Cut it loose if we retest support at 60 for maybe a 50 to 70% gain would be likely in that scenario. Unfortunately, prices are kind of all messed up here after hours on XLE to really demonstrate that fully. IYR is the one I usually look at, as far as on the bearish side, but again, similar to XLRE as well. Again, you can trade the downside in these 23 days out. You could go 36 days. The vol skew is very favorable to buy the higher strike and sell the lower strike. Buy the 87.50, sell the 85.50. In this case, it might cost you about 70, 80 cents. And again, decent upside here if we just pull back to about 85 here in IYR. So the downside opportunities there, the bullish side in XLE. And as we look forward, again, we'll have to see how tomorrow sorts out in terms of Nvidia. We may see continued bid under the consumer staple space for this week. I walked through a setup yesterday in Starbucks and also Kraft Heinz, bullish call option activity in both of those names yesterday. Procter & Gamble seeing a bid under it today, breaking out to a new high. From a valuation standpoint, not amazing, but Again, we just got to recognize these things may have limited room to the upside. In the case of PG, maybe a chance of going to 165 on the upside here. So all of a sudden you got maybe a 3-4% move with reasonable amounts of risk. Again, the problem with some of these stocks is being able to construct a vertical spread, which is what I kind of turn to, is more limited because of the falling volatility structure here. Again, 170, 175, but 175 is, if we go back 3 years here so we can see the prior high, that gets us well above the prior highs. And so it's harder to go bullish here, maybe trading the shares, maybe even buying a call, going in the money a little bit, 70, 80 delta could be reasonable. If you stay out of the money, going 58 days may work at 165, 160. Just look to roll it. If you get a 30 to 40% gain in it to the higher strike. But again, limited opportunity in staples here. We may see a continued push this week, maybe into next week. There's definitely been a continued flow of bullish option activity. The last one I'm going to share here is for BTU. BTU has been on a pullback of late. If you look at coal use for energy, China and India, it's by far the most significant source of power in those countries. Again, whether or not there's the outlook for these companies or not within the coal space, particularly for energy production, Peabody's kind of a poster child for this. Today, it did catch a bid. I mean, on its earnings, it did gap down, rallied. We just sold off. We're catching a bid today, albeit on lower volume. But BTU is kind of an interesting one. Today, there was some bullish option activity with the March expiration out here, 26 and 27, mostly call option buying. Could you construct an upside spread here? Notice that the vol structure is not unfavorable like other products. It's pretty flattish out here for March. Out in April, if you want to give yourself more time, it's a little less favorable. But if you keep things a little tighter, we're at 2470 right now, a 2550, 2650, buy deep and wide, 1 month, 2 strike vertical. We're a little bit out of the money there. If we look at the delta on that, it's about a 40 delta though, right? A reasonable chance of touching 25 or 2650 for that matter, maybe close to a 50% chance of touching 2650, only a 28-cent debit, risking 28 to make 72. And realistically, if you could make 28 cents, sell it for 56, you probably look at doing that. And we're only looking at, based on the spread here, getting to 2650, which is close to prior highs. Again, going back to kind of relating back here. And again, the bullish option activity today at 26 and 27 dovetails with that spread. And again, the vol structure is not too bad, right? To construct something in here, very similar volatility. So you're not taking away to creating a negative edge. There's no edge in this, but it's similar. But again, there's some premium to sell at 2650 to mitigate some of the risk. Well, folks, wrap it up there. We'll catch you back on Monday for my next video. Hope you have a great one. See you back. Thank you.